One of the top tech analysts says that these new tariffs are even worse than the worst case scenario. Okay, so stocks are all plummeted or crashed, and in today's video, we will break down what Trump actually did, the impact on the various stocks, and what am I doing at this scary moment. But before that, if you haven't done so, do join my free weekly newsletter where you will get tips on the US and Singapore stock markets, stock ideas, analyst reports, and many more. You can find the link down in the description box below. So without further ado, let's jump back to the video. Okay, so Trump has effectively launched Trade War 2.0, and here's the rundown. He announced a sweeping 10% universal tariffs on all countries. Even if you are from the Antarctica, even you are just penguins walking around, you are faced with a 10% tax. And certain countries, especially those low cost exporters, get hit the hardest. So some examples here are like China. China got faced with a 20% tax beforehand, and now it's an additional 34%. Vietnam, 46%, which we will dive into this more deeper in the next few slides. Okay, apparently a lot of our stuff are made from Vietnam. And EU, that means European Union, which is the key ally of US, also get hit a 20% tariffs. But what's the real deal? So tariffs are essentially taxes on imported goods. So that means all the inputs that come in from the overseas countries. So despite Donald Trump's claims on making America great again, it's the US consumers who will pay in the end. And higher prices for everyday Americans means there will likely be lower economic growth, okay, lower economic growth, and definitely a risk of the global trade war, which rivals that in the 1930s. Quick rundown of what are the sectors in US that will get hit the hardest. So first of all, we have the technology sector, which have the heaviest exposure to Asian manufacturing. So all the Asia countries that manufacture the precision parts, like for example Malaysia or China, and export them back to US, yes, that will get hit with the tariffs. Next up, consumer discretionary. So all the retail chains, when you talk about Target, maybe Best Buys, or even the Dollar Tree stores that rely heavily on imports from overseas, they will definitely face margin pressure. The profit margin will get squeezed. Either they pass on the increase in the tariffs to the consumers, or they have to absorb themselves. Next up, materials and industrials. So we all know that the input costs will increase because US manufacturing is not as robust, or they don't manufacture in bulk quantity. So a lot of these inputs come from overseas countries, and hence they are really integrated in the kind of a supply chain. With the tariffs coming in, there will be definitely a lot of disruptions, input costs will increase, and ultimately, I believe that the US economy will get hit the hardest. And that's why US stocks are crashing. At the time of this video, I believe that S&P 500 is already down 3 to 5%. When we talk about the supply chain disruption, right, let's talk about some stocks that are being affected. Okay, many of which are the big names you already know as well. For example, Apple. Okay, the iPhone maker is right in the crosshairs of the Donald Trump tariffs. Why? Because Apple basically produces all the iPhones in China. Okay, and as a result, when the announcement is made, the stock price actually dropped 6 to 7%. That's a huge drop for Apple itself. Okay, but if you were to ask me, don't jump into Apple stock yet because you will not know what is the real impact. To the stock price after a while. Maybe you can just sit on the sidelines and wait for things to cool down. The other thing, Nike. Okay, so Nike, again, the biggest sportswear company in the world also get caught in the crossfire because they manufacture a huge chunk of their shoes and the gear overseas, especially in Vietnam and China. Okay, so with the 50 something percent effective tariffs on um, all their imports, they also have a stock decline of around 7%. But what is worse is maybe in the e-commerce sector, like for example, Amazon, Shopify. You know, Shopify dropped over 19% in over 2 days. Because think about it, Shopify is an e-commerce enabler, and as e-commerce, you have to have a lot of trade. Okay, maybe you import, export, maybe you set up maybe a regional store and you export to other countries. You import from other countries. So a global trade war will definitely impact the small medium businesses, and hence these businesses may say that, oh, maybe I want to lower my expenses or even totally cut off the subscriptions to Shopify. So that is the result of why Shopify actually dropped 19%. Last but not least, discount retailers, like what I mentioned, they rely heavily on imports, absolutely created as well. So we have a lot of discount chains like Dollar Tree, Five Below, okay, and they source tons of free goods, not free goods, sorry, cheap goods from China and Vietnam. So they also plunged 10 to 15% in a single day. In short, any company with heavy overseas manufacturing or global supply dependence will feel the sting. Alright, with all this chaos, what am I doing personally? I have devised a game plan for myself, splitting into short term and long term. Now let's talk about the short term first, okay? Short term. So we all know that tariffs they directly impact those sectors or stocks that are heavily reliant on trades, global trade, for instance, and hence if we were to look at it more objectively, I will go for more defensive sectors like those maybe more towards the utility side, okay, like companies like Semcorp Industries that provide utilities, clearing of the waste, generating of power, or even maybe Singtel, Starhub, or even those grocery supermarkets. So even though they have a lot of imports, but they do show resilience during this kind of trade tensions. Okay, so utilities is one. The other one is real estate. So real estate in the form of REITs or trust. At the time of this video, I believe that right now interest rates are coming down. Going forward, maybe it will come down even more, and hence their distribution use will be able to be sustained or even go up higher as they are more resilient and inflation proof. Okay, so if you compare, they are giving out maybe a 6 to 7% distribution yield as compared to US stocks which are free falling. So this is like a no brainer kind of a switch. Okay, so these are the two main sectors that I may consider to pivot to. And on top of that, we also have safe havens. There are a lot of safe havens apart from fixed deposits or treasury bills. One of it is gold. Okay, gold has also increased by a lot. Right now, it's trading at more than $3,000. So 1 year ago, if you were to buy gold, it's only 2,000 plus. You would have made more than 30%, 40% in just 1 year period. Of course, on top of gold, treasury bonds, T bills, and all that kind of thing, you can also park your cash as cash reserves lah, or like a cash hoard. And what I would do usually for myself is to park it into a cash management account where they sort of generate higher returns while you can pull them out anytime you want to maybe invest in stocks that you see a good bargain or an opportunity that you don't want to miss. As for the cash management accounts for myself, I'm using Momo. If you're interested, you can use my affiliate link down below. I will put it in the description box. Okay. Sometimes there are ongoing promotions that allow you to gain up to even 6% on the cash that you put with Momo itself or any other kind of brokerage firms, lah, those low cost brokerages. Anyway, I will leave the links down below. You can check them out if you are interested. And the short term wise, I will also tend to reduce my exposure, okay, to all these vulnerable sectors. If it's really those kind of import independent retailers, I will trim my positions, and I will try to avoid those consumer discretionary stocks with very razor thin margins. So this is very important because when you are already with thin margins and you get hit with tariffs, I think uh, it's gonna get worse very quickly, very fast. Zoom out, because long-term investing is a different story. If you have been investing for years or decades, you would have heard of this quote by Warren Buffett: be greedy when others are fearful. Be fearful when others are greedy. So over here right now, everyone is panicking. And what we should do is to maintain our perspective. Okay, so first of all, maintain the perspective. There have always been cases where there is turmoil in the market, high volatility. For example, SARS. For example, COVID. For example, the Great Depression and all this kind of stuff. Okay, but the markets will always go up in the long term. Okay, so with that in mind, right, when great stocks or quality stocks go on sale due to fear, this is a good time to bargain hunt or scoop them up at a discount, provided you have done your homework and have confidence in their future. Okay, so the thing is to focus on the fundamentals of these quality stocks. Look for fundamentally strong firms. So that means their balance sheet must be strong. They have free cash flow. uh, they are able to generate free cash flow on a recurring basis, and they have very strong economic moats, such as network effect, such as a strong distribution network, the kind of thing, right, that will hold them through the turbulence. Okay, they are also those that are most adaptable to all these kind of changing conditions. So let's talk about, like, for example, Apple. Apple has a wide economic mode. Everyone knows about it. So even if the prices of the iPhones or MacBook increase, they are likely to just pass on the higher cost to consumers, not really impacting them to a very big margin. Okay, and the last thing is to keep calm and stick to your strategy, or I would say stay diversified. Okay, so don't just whack all in into like maybe Apple or Nike that is facing all these brunt of the tariffs. So instead, choose to spread your investments across the different sectors and geographies. For me myself, I'm looking more towards Singapore and Hong Kong, especially due to this climate. Hong Kong or China stocks itself, I'm looking more towards those that cater to their domestic home market. Companies like Hai Di Lao, which I've covered in a few videos beforehand. Yeah, last time, if you want, you can check out my YouTube channel and go browse for Hai Di Lao. Okay, so Hai Di Lao predominantly they serve in the China itself, or even you can talk about like Mi Xue. Okay, the recently IPO, they just listed in Hong Kong. Okay, Mi Xue, they cater all these ice cream and bubble teas for predominantly China and Asia markets. So these are the kind of stocks that you can also explore. I'm not saying that just go for this, but you can spread your investments across them. This talk of a global trade war have really spooked investors all the way from Wall Street to Raffles Place. Okay, anyway, it's a scary headline for sure. But okay, if we were to talk about TLDR, okay, we need to zoom out. First of all, in the short run, be cautious and pick your battles. Okay, I would say shift away from the most tariff exposed stocks. And in the long run, remember the big picture. So maybe 10 years down the road, you will see all this as just merely some minor fluctuation, okay? Because when you look at it in decades, okay, the stock market always go up. And the stock market is only risky because your holding period isn't long enough. So again, remember the big picture, the market rewards patience and resilience. Today's panic can become tomorrow's opportunity if you just focus on quality stocks and keep to your plan. Okay, stick to what you have envisioned from the very beginning. Volatility is part of investing, so managing risk while staying invested is the key to long-term success. And as always, if you find this video helpful, do help me to smash the like button, subscribe to my YouTube channel for more investment insights like this. Anyway, if you have any questions or your own thoughts about Donald Trump's tariffs coming to a global trade war, leave a comment down below. I would love to see or hear about how you are positioning your portfolios. And don't forget to also sign up for my newsletter at investkaki.com/beehive for more insights and tips delivered to your inbox every single week for free. Thank you everyone. See you in the next video.